Is it finally blue skies for home buyers? We have been waiting for years to it become a buyer's market. Are we finally there? So in this June mortgage and housing update, I'll be covering some of the data that we're starting to see, as well as what I'm seeing on the front line of housing that is showing that yes, indeed, just like my dress, blue skies are shining for borrowers. Okay, guys, if you're new to the channel, if you're not, say it with me. I'm a mortgage lender licensed in 48 states. My team's in 50. I am one of the top purchase lenders in America. This matters because every single day I talk to buyers across the country, and I've been doing this for 18 years. It's been rough for buyers, right? Can we just be honest about that? 2021, 2022, parts of 2023, even though rates were crazy low, the competition was fierce. It was brutal. Then you had rates jump in 23, 24, pretty similar, but we had less competition, which was good since we had those higher rates. And what we're seeing with 25 is very similar to 24. However, we have more inventory. And that is what we have been waiting for, because the bottom line with any of this is supply versus demand. If you have a smaller supply than demand, that is when you keep on seeing prices go up, up, up. If you have a greater supply than demand, that is when we flip to a buyer's market. Now, let me just read you a headline because I think this is very important to talk about. Quote, U.S. housing market now has 500,000 more sellers than buyers, and it's leading to a shift in the balance of power. Now, look, most of us read that, and if you're not a mortgage professional or real estate professional, you're going to go, oh my God, finally, houses are free. Look, the thing to know about inventory and articles like that is there are pockets of the country where there is more inventory concentrated. Those are going to be the areas that we've talked about in other videos where there were a lot of new builders that came in. We do still have pockets of the country with limited inventory. However, overall, what I'm seeing, and yesterday was really a good, I thought it was a good barometer for me, and I'm going to tell you what happened yesterday so you can understand why. So yesterday was Thursday, and on Thursdays, it's one of my client call days, which are my favorite days because I love talking to people. And, you know, we're talking about where they're shopping, what they're looking at. I like to go online to homes.com and look with them at the houses they're looking at. I want to make sure they're financeable, right? That's my main thing. I want to walk them through like, hey, you better watch out for that. Don't do that. Look at that. That's not financeable. That's a money pit. You know, I think you're getting catfish there. Some of that fun stuff that we have to talk about these days. But what I also like to do is I like to see how much inventory is in the area. So for example, yesterday I had clients from Alabama, Wisconsin, Idaho, Iowa, and Indiana. That's right, I know, all the I's were yesterday. And what I saw is that every single one of those areas had a good amount of inventory, meaning that I opened up the map where the clients were looking, and instead of seeing maybe 20 to 40 houses for sale, which is what we have seen in many parts of the country over the last few years, I was seeing 100, 200, you know, there were options. Now, let's be clear about this. Every single one of those clients, did they have multiple houses they could go look at? Yes and no. You know, we still have areas, I'm going to use Wisconsin as an example because you're like, well, I'm sure in Wisconsin it's not competitive. No, guys, Wisconsin, if a house, the area that I was looking at, prices were between $200 and $350. If the house is priced right, meaning it's priced appropriately for the market, the house is in good condition. You know, I was looking at a house with a client. It had been on the market for a day. He was about to write an offer. It already had 4 offers and it was going into a competitive bidding situation. So there are still those variances, and it's important for you to know. So the biggest message from all of this is, look, if you were shopping in 21 or 22 or even 23, and you were like, there's nothing for sale, even 24, guys, we have so much more inventory than 2024, and that's a good thing because as a real estate market, we've been operating with far too little supply for too long. And that is how things got so dang expensive, okay? Let me read you some fun stuff now. So the number of houses, this is from the Redfin Economist. I'm just going to use a couple of the things that he pointed out, which I think are interesting to you guys. The number of houses selling over list price is the lowest since spring 2020. That's a good sign for buyers. Now look, is that in every market? No, but they're looking at a national average and they're going, okay, what percentage of houses are selling over list price? The fact that it's the lowest since spring of 2020 is great. Spring of 2020 would be the last almost real pre-COVID market we had, right? Because if you remember, all the COVID shutdowns started at the end of March. I know this because my birthday is in April and I thought we would be free in California by my birthday, and then we were locked in for 2 years. California. Anyways, so that's great news for buyers because it has been kind of ridiculous. Okay. The other thing he said, and I say this in videos a lot, but I think it's really good when we start to see the mainstream media pick this up. He said, house hunters should know that sellers are accepting offers below asking and offering concessions to get deals done. Look, this has always been something you can do, right? Like list price, and I think this is really important, and I wanted to talk to you guys about this today because this is something I was talking about a lot yesterday. The price that a house is listed at often is just what a seller wants. It's not reality. So a lot of times I'll see buyers where they're like, oh, but that house is above my price range. And I'm like, it's been on the market for 90 days. Offer less, okay? Now look, if a house has been on the market for a day and it's listed at $500,000, does it make sense to offer $250,000? No, but something I would advise all of you guys to do is when you're working with a real estate agent, if you see a house you like, even if it's a little bit above your budget, ask the real estate agent, say, hey, like this is listed at this, do you mind pulling comparable sales? Comparable sales will tell you how much the houses in that area have sold and if what the seller has it listed at is realistic, okay? Buyers assume that what a seller lists the house at is what they have to get. As both a mortgage lender and also one of those sellers, I can tell you a lot of times sellers have the house listed at what they would love to get, but the real estate agent's telling them they're not realistic. They know they're probably not realistic. They're just hoping they get a sucker. It's that simple. So stop looking at these list prices as, you know, the end all and be all. Comparable sales will show you what the house is really worth. And if you're like, oh, it's still more than I can afford, how long has it been on the market and is the seller motivated? Question mark, okay? In terms of seller concessions, if you're like, what are those, Jen? So what seller concessions are is, and I recommend this with a ton of our clients, you ask the seller to pay your closing costs. This makes it much more affordable for you to get into the house. So depending on the loan program, you can ask for conventional, if you're doing less than 10% down, you can ask for the seller to pay 3% towards closing costs. So $500,000 house, you can ask them to cover $15,000. Most states, that's gonna cover it. New York, we'll see what your property taxes are. VA, there is no limit, right? It has to be reasonable, and then you can ask for another 4% on top. FHA, you can ask the seller to cover 6%. Conventional, more than 10% down, you can ask the seller to cover 6%. So look, there are ways to get into houses where, look, if you're a veteran, 0 down, let's get the seller to pay your closing costs. If you're in a market where there's a lot of inventory, let's get them to pay off some of your debt too. VA is the only loan you can do that with. FHA and conventional, let's get you in with just the down payment. Let's get this seller to pay the rest. Now, if you have a real estate agent that's saying no one will do that, generalizations like that don't make sense, right? You don't know, every seller's not the same. Every seller doesn't have the same motivation. You do need someone that will negotiate on your behalf. Important. Okay, what else do I want to cover on here? This was interesting. So there's been a lot of chatter about new home building. And if you watch this channel, you know I've talked about new home builds, what you need to watch out for, etc. So the cost of a new home versus an already existing home is only $15,000 more, approximately. Yeah, seriously, you would expect that newer would be more valuable, newer would be worth more. In 2019, a new build versus an existing home, on average, these are national average, $66,000 more. And you're like, whoa, why were new builds worth more than existing in 2019, but not so much now? There's a couple different reasons, guys. First of all, you have areas of the country where multiple builders went in at the same time. They didn't think rates were going to stay this high this long. Like, look, no one wanted them to, but at the same point, they've got to move that inventory. So they're doing a lot of incentives to get the houses moved. Also, and this is something I talk to my buyers about, yard size. What happened to the great American yard? That's right. Can we talk about this? Chime in the comments. Like, look, if I'm buying a house, I want a backyard. I need somewhere to have a barbecue so that once a year I can guilt trip my husband into charring corn. You know, a lot of people, depending on if you're in a hot climate, may want a pool. But with new construction, what we see more and more of is the ever shrinking yard, right? How do you keep those profits up? Well, you fit as many houses as you can. And it's an interesting point in time because, you know, in my 18 years of doing this, I am seeing more and more people who want space. I'm seeing more and more people who want to grow their food. So it will be interesting to see if new home builders pick up on this movement and some of their future plans take this into account. Because I really do believe if a lot of these homes had bigger yards, that they would be going for more than what they currently are. Weigh in, maybe I'm just a yard addict. Okay, let's see here. What else? There's so much, guys. Okay, let's talk about mortgage rates. Look, mortgage rates are fairly similar to what they've been for the last few months. There's ebbs and flows of volatility. It's going to continue. You know, you've got J.D. Vance calling out Powell, saying that he is committing, are you ready for this one? Monetary malpractice. But last night, Israel attacked Iran, and Iran counterattacked. So you've got a new war going over there. Oil prices are going up. That could lead to inflation. We still don't have the tariffs hammered out. So the odds of the Fed dropping the Fed fund rate next week, oh, I mean, if they did, I might actually fall out of my chair. I don't think that we're going to see any movement from the Fed until we have some certainty in the world. And I have to say that based on what we've seen, guys, it's only June. I feel like I've lived 9 lives this year, man. Like the level of volatility and just what's going on in the world. You know, you've got Trump and Musk fighting. There's just riots in California. Apparently they're coming to Florida this weekend. It's just so much volatility. So that's going to be really interesting to watch. Once again, my recommendation is this. All of this stuff that's going on around us, your day-to-day is what's most important, right? You know, I was thinking about this because I was recently on a trip with my son. What do I care about most? I care about coming home to my family. I care about what we make in the kitchen. I care about eating together. I care about, you know, where everybody is safe. That is what I care about, and that is what I can control. And I think that's a good mindset to take moving into the next 6 months, because I think if you focus too much on all the things that are going on, it's just overwhelming. And the bottom line is it going to affect how much the house costs you? No. So if you are renting and if you are looking for a stable place for yourself or your family, or you're starting to invest in real estate, the key is going to be making sure that you're comfortable with the payment for the price range you're looking at. So make sure that you're working with a lender that's going through the numbers with you, fully underwriting you, and making sure that you are comfortable. Do not max qual, people. Okay, so on the lending front, if you guys need help, if you have questions, if you want to get fully underwritten and approved, if you just want to start shopping, call us, 786-933-2077. Okay, I'm going to wrap this up with some positive legislation progress. That's right. You're like, what is this? Okay, we've talked about trigger leads on this channel before. Basically, when a lender does a hard credit pull of your credit, they sell your information to other lenders. Yeah, the credit bureaus do. So all of a sudden, people are getting all these phone calls, they're getting these text messages. Like, there's companies that will call you and lie, and they'll be like, I'm on Jennifer's team, or they'll be like, VA assigned me to you. Lies, lies, lies. They're all trash, right? Great news. A bill just passed the House to ban this practice. Now, look, it still has to go to the Senate, but this is progress, right? Finally, they're starting to understand that you, the consumer, deserve privacy. You shouldn't have all these random people that you didn't ask to call you, calling you and trying to trick you into doing a mortgage with them. If you want to do a mortgage with someone, you should be reaching out to them, not them stalking you. So that's progress. Now, one interesting thing, there is a representative in California by the name of Young Kim, and they actually want a study done to see if you getting text messages instead of calling from lenders you never asked to call you, if that's better for you. Look, I would definitely make your voice heard on this one, because I think we all know none of us want text messages we didn't ask for. Also, that is how so many people get their identity stolen. How are you supposed to weigh if it's a real mortgage offer or if it's a cyber criminal? Who the hell knows these days, right? So definitely look into that legislation. The other good thing is that, here's a fun fact, FICO has increased the cost, their cost to do a credit report by 700% in the last 30 months. I started covering this about 1.5 years ago, and I was like, this is crazy. Credit reports are too darn expensive. It's not just FICO, it's Experian, it's Equifax, it's the TransUnion, it's the people that sell the credit data to the lenders. And the good news is that Pulte, who runs Fannie and Freddie, is aware and is saying this needs to stop. Credit report costs are crazy right now. You know, I remember back in the day, a credit report was like $10. Now credit services, because you've got soft pulls, hard pulls, easily over $100 a person. Madness, madness. So the fact that Pulte is actually paying attention to this, you know, the reason it's been able to go on for so long is because Fannie and Freddie have required that it's a FICO score that we're underwriting files. Same with FHA and VA. So we may see some changes on this, which may bring down that cost for you a bit, which would be great. I know it's not going to be thousands of dollars, guys, but we will take every single nickel or dollar we can to help you save money right now. So that's good news. It feels like the powers that be, you know, whether it be the trigger bill, getting rid of those, or credit report costs, are listening, and they're hearing you guys say enough. And I love that. I love that for us all. So look, as always, questions, comments, feel free to reach out. But yeah, I'm seeing blue skies for buyers. It's a lot of fun looking at houses. Yes, affordable housing is still available. I was literally looking at houses yesterday that were between $200,000 and $250,000, 3-bedroom, 2-bathroom, nice neighborhoods, nice areas. It still exists. So feel free to reach out. Last time on the phone number, 786-933-2077. Thanks for watching.